All right, and we're ready to go. Good morning, trade pros. Welcome to our YouTube morning market update for October the 30th. It's now Tuesday, October 30th, 2018. We got a lot of updates for you in today's session. We're going to talk about China, Donald Trump and the latest escalation there. We're also going to talk about Fang stocks, and some key earnings that came out today in the market. All right, so let's get started by saying this. It looks like equities are looking for more downside. They're not ready to rebound, and we've been seeing solid selling pressure across the board, and that's an alliteration. Solid selling. Actually, it's not, because the pressure is not an S. Anywho, I'll think of a nice, clever one for you before the end of the broadcast. We're seeing a ton of selling as institutional money offloads their position, and retail traders are buying the dip, hoping for a comeback. We've seen that consistent with the reports that we provide every Sunday to our subscribers, showing institutional money is coming out of the market and retail is getting in. All right, so let's take a little gander through the markets. In Asia, Japan's up 1.4%. Hong Kong is down a 0.9 or 1 percentage point. China's up 1%, and India's down 0.5%. The key thing here is China being up 1%. You're going to wonder why. China guided the yuan to the lowest official level in over a decade. All right. One of the things the United States is not pleased with on China is them lowering their currency valuation, and China's just done that today, the most in to the lowest level in nearly a decade. And it's not good for the discussion that they're heading into with Donald Trump, which, by the way, Donald Trump yesterday said that if the meeting between him and Chinese leader doesn't go successfully and they don't come to an agreement, which at this point there's very low likelihood that they're going to come to an agreement until this thing intensifies to the point that one side just cracks. And that being the case, if they don't agree to a meeting coming up, then early December, the second and final round of tariffs are going to be applied to all goods coming in from China. I think it was 235 billion remaining valuation of goods. They're all going to be tariffed at the rate of 10%. And Donald Trump still got the card to play from 10 to increase to 25%. All right, so that's the latest escalation. That's the latest down pressure on the market. At a time when the market's trying desperately to recover, at a time when we're getting bad earnings, you throw that into the fire, and that's fuel to burn more. All right. In Europe at midday, London's pretty much flat. Paris is down almost 0.5%. Frankfurt's down 0.3%. Bearish price action here. United States, Dow Jones is up 0.2, S&P's up 0.3, Nasdaq up 0.2 percentage point. Yesterday was a very volatile trading day. The Dow Jones climbed initially and then fell more than 900 points, only to see that price action reverse back up 15 minutes before the close as algorithms started buying the thing. The plunge protection team showed up and bid the thing up to be down only 1% for the day. It got ugly at one point, very ugly. Crude oil today is down over a percentage point on reports that institutional money is selling out and speculators. And now we've gone from, we had a very grotesquely long position in crude by institutional money. Now they've offloaded it. Now we're getting to the point where it's almost low. I can't wait to see the latest round of reports this Friday that come out that shows institutional interest, volume, and trading activity, and to look at the hedge activity. If they've hedged a lot and they've added a lot to the downside, it might be time to run some buy stops to the upside. All right, that's crude oil. It's down. We got an API inventory report today at the end of trading at the closing bell. So it'll be interesting to see what happens there. There's going to be some volatility. Gold prices are down slightly at 1222. 10-year treasury yields are going up now at 3.12. Remember, 3.3 is the level at which many institutional traders and bond traders specifically think that the market's going to implode. If we hit 3.3, it won't be a sudden thing, but we are putting upside pressure on bond yields on the 10-year, and this upside pressure means it increases borrowing costs, consumers and businesses, and that puts downside pressure on equities. And the dollar should be rallying, but it's not. All right, not as much as you would think. In today's economic calendar, 9 a.m. we have Case-Shiller Home Price Index, so we've already had it. 10 a.m. we have consumer confidence. That's an interesting statistic heading into a holiday market. And 10, we also have State Street Investor Confidence Index. And 3 p.m. we have farm prices. So all you farmers get excited. All right. not a crazy busy economic calendar today, but it's starting to pick up. Later on tonight, you're going to have the Bank of Japan's monetary policy, and then early in the morning, around 1 a.m. on Wednesday, tomorrow morning, you're going to get the press conference, the Bank of Japan, and it's going to be interesting for them to talk about stimulus. I can tell you the whole market's going to be watching this. And then this Friday coming up, we have non-farm payrolls. Next Tuesday, we have midterm elections. If you want to know how to trade midterm elections and how to prepare yourself, an article just came out this morning. And if you check the link in the description in 2 minutes, you'll see the link there. All right. Or go to our website, tradeproacademy.com/blog. It's the first post there. It's an amazing article. It'll teach you how to trade midterm elections, what not to do, what to avoid at all costs, because you're going to get beat up if you do this one thing. I'll give you a tip on how to avoid it. Last time we traded elections, we traded live, and a lot of people had to learn that lesson painfully, unfortunately. You don't. All right, take advantage of past experiences. Learn from them. All right, Fang stocks yesterday officially hit bearish market territory, which means they are down 20%. All right, or more. Facebook is expected to report earnings after the bell, their third quarter earnings. And the social networks revenue is expected to have grown 33% in Q3, which sounds amazing. However, it's the slowest since it listed its shares in 2012. All right, so 33% is not what Facebook is used to. This is what I was saying. There comes a point in a market cycle where earnings have been so good and everything's so amazing, and everyone's been high-fiving for so long that their palms are red. And at that point forward, it's going to be hard to reach a next level of excitement. You know, you're almost at euphoria. You need continuously more fun in order to feel anything, to feel alive before it starts to come down. And so, I mean, some of you might be thinking of some crazy party analogies. I don't have too many of those. So yeah, 33%, not enough in Q3. It's expected to have a boost by their mobile ad business, which is great. Facebook's monetized mobile ads, and we've kind of clapped and applauded that already. But now their revenue stream looks like it will be the slowest since 2012. And there's been a lot of troubles with privacy and security breaches, and an institutional shareholders trying to oust Mark Zuckerberg, not understanding how Class A and Class B shares work, I suppose. Right. Yesterday, $200 billion worth of Fang was slashed off the market capitalization of all Fang stocks. Facebook, Apple, Netflix, Google, Amazon combined slashed $200 billion of value in one day. All right, that's not good. Amazon officially entered bear market territory. This morning, General Electric had a chance to give the market something to smile about. Whiffs. Q3 comes in at 14 cents earnings per share versus 21 expected. Huge miss. Revenue 29.6 billion versus 29.9 billion. They cut their dividend to reorganize their power unit. GE pretty much gave nothing to investors. It promised investors big news, and it slapped them in the face, and they walked away and are selling shares. All right. Their power revenue business is down 33% year over year, which is a staple, a core part of, in fact, one of the largest driver of their revenue, second to only aviation, which is up 12%. All right. So General Electric didn't help us this morning. Coca-Cola reports third quarter 58 cents per share versus 55 expected. Revenue in line with expectations. Guides Q4 revenues up 7%. So that's not bad. Coca-Cola, good job. And Coca-Cola is one of those products that, you know, even if you're in a recession and you lose a ton of money on the market on the way home from the office, are you going to pick up a can of Coca-Cola? Probably. All right. It's one of those assets that moves counter the economic cycle. I'm going on like 3 hours of sleep. There's a word for that. It's cyclical and defensive. That's what I meant to say. All right. Last but not least today, the Lion Air flight. This is terrible. 190 people, more than likely at this point, have died. So our condolences to anyone in their families, anyone who's got a connection to this. Heck, I don't know the people, and I feel for them. And it's just, it's just compassion. I really want people to be happy and this stuff to not happen. But on Monday, that airliner crashed. It's the first crash for a 737 MAX Boeing airplane. Boeing shares are down 7% following these events. It was initially reported that it just crashed, so there wasn't as much volatility because we didn't know if it was pilot error or not. And then we found out that the flight flew erratically the night before. It was serviced according to procedural standard and then released for a flight the next day, and then it crashes. There was apparently one of the people on this flight that was texting a reporter, which sounds very suspicious. However, was texting a reporter and said that people were vomiting and in panic from the elevation increases and decreases, rocking up and down. Very clearly had a mechanical issue, and then crashed 13 minutes after takeoff. That 737 is the first crash of its kind for that airplane series, and Boeing is down 7%. But more importantly, we're down 189 souls, and that's what we got to send our condolences for, and well wishes. And for today's stock markets, I think we're going to continue the downside. It looks like every single rally we've had has been a dead cat bounce. All right. Hate to be graphic, but that's the term for the industry, dead cat bounce. Why is it a dead cat bounce? Because if you throw a cat off the 10th floor balcony and it hits the ground, even it's going to bounce. Prospects of it surviving are slim. I don't care if it lands on its legs and has 9 lives. All right. So today, at some point, we're going to rebound from the sell-off, but it ain't yet. All right. Keep selling rallies until you see some positive bullish momentum, which looks like some upside in price with some volume to support it. Until you see that, upside ain't the right side. All right. And it was an error to think that yesterday. We tried the long, reversed the short side, and had a great day. All right, team. Have yourself a great day. Got to turn around and speak to the TradePro team and get them up to speed, give them some levels to trade off of, and plan the next best trades at the low risk, high probability, and what we're going to do and where we're going to do them. We'll see you guys in the trading room. Check out our free training, tradeproacademy.com, and our brand new blog post today that came out that says, Marky's flexing behind the camera. Nice pipes, Marky. The brand new blog post today just came out on how to trade the midterm elections. It's eye-opening and very beneficial. Take care. Goodbye. Manage your risk like a Trade Pro. All right, guys. Trade Pro's in the room. Look at that. As I talked, we're down. How much are we down right now? 43 down to 37. Down a lot. Yeah, man. Almost 10 points indeed as I'm here speaking. So let's plant some levels here that we can look for some high probability trade opportunities. I think the downside's obviously the right side. The question is, where do we get in? And at what point do we have a great deal of support? So I'm going to take you through that for S&P 500, as well for NASDAQ, oil, and gold. NASDAQ's down almost 100 points, says Victoria. Wow, already? That's crazy. We're going to have a volatile day. Lots of opportunity to make money, guys.